Just another look there at Lightspeed. As I said in the interview with Dax De Silva, the stock down this year. However, investors do like the look of the latest numbers. The stock up about 12% this year. Let's stick with technology. AI-related tech companies posting big earnings, generally speaking, this season. But will the momentum continue? And are there opportunities elsewhere in the market? We're joined by Chhad Aul, who is Chief Investment Officer and Head of Multi-Asset Solutions at SLGI Asset Management. Chhad, great to see you as ever.
Great to be here.
Just look back at this earnings season from the U.S. big techs. Is it fair to say it was strong?
I mean, it is a little bit of a story of more of the same. I mean, you've got the strongest total earnings growth coming from those areas. Still positive surprises as well. I mean, around the fringes, I'd say the market's paying a little bit more attention to the potential for some overspending around CapEx, and certainly some of the consolidation we've seen in the market over the last couple of days has been around those themes, around valuations, around potentially overspending. But in general, the theme is intact, and that's still the growth area is still a secular area of growth. I think the market is going to pay a lot of attention to. And while after we get through this short period, I do think these stocks are going to continue to run higher into the end of the year.
We're into a seasonally attractive part of the year for equities. What's your feeling about the rest of 2025?
Yeah, and like I said, now that we're through some of the concerns around seasonally, late September, October, often a period of concern. Getting through this earnings season for some of the major players in the U.S. market and certainly some of the high flyers, I think that we have a good setup for further gains into year end. And I mean, the underlying themes, still, had central banks easing last week. I think the Fed is going to ease once more this year, again, giving further momentum to the upside. I think generally the sentiment is intact, and we expect the markets to move higher through the end of the year.
What other sectors are attracting you right now?
Yeah, so I mean, while we've got an overweight position in equities overall, specifically in the U.S. that we took on around middle of October, where we saw a little bit of a pullback, we are also playing a little bit of a barbell from a sector perspective. So we like defensive areas like healthcare on the one hand, while also playing communication services as a way again to have exposure to the secular theme around AI and in terms of the media side of those communication companies. And then, of course, you've got the more traditional telcos giving you, again, defensive characteristics, much like what we like about healthcare.
And broadly speaking, the U.S. economy has not been slowed down yet markedly by tariffs. Of course, the job market is showing signs of cracks. What south of the border, are there particular categories, though, that you're avoiding if you have any concerns about the economy?
I mean, and of course, we don't have the best data with the government shutdown. So trying to piece things together from private data and looking at trends, because again, things can be a little bit volatile. It does appear that the labor market continues to slow, not completely falling out of bed from that perspective. So I mean, more outside again of the AI kind of secular theme, more discretionary areas are ones that we would avoid, given that we are thinking that the labor market will continue to cool. And again, we're also seeing some more concern around the AI replacement of jobs as well. So there is going to really be a setup, and potentially one of the themes for next year is kind of this K-shaped economy, where you do have the gainers in the ecosystem around this theme on AI, and you have other areas that continue to slow. And I think you can want to play your investment opportunities with a very similar sort of barbell.
We had a distinctly left-wing candidate for mayor elected in New York. I know New York is not America, but do you think that could be a sign of growing concern over income inequality?
I mean, income inequality, it's been something it's been an issue growing over the years, and it appears that every scenario or every setback we've had, whether it was a pandemic or any scenario, the hyperinflation sort of, or the high inflation that came out of the pandemic, just adds to the income inequality story. And I mean, it flows into the politics, certainly, but it as well is one that you want to pay attention to from an investment perspective. And again, it gets into, greater share of spending going into staples, for example. Why, we do continue to think that your staples area will be a great defensive play once we're a little bit closer to the economy, tipping into more of a recessionary risk, where we're not quite there, right? At the same time, the spending and the capex is very much on the other side of that barbell around the technology side of things. So it's certainly something to pay attention to, but there is as well, we continue to see it in the services data, right? There is certainly still segments of the population that are still out there and willing to spend. So again, playing your portfolio exposures across the income spectrum certainly does play into that theme as well.
Thanks very much, Chhad. Chhad Aul, Chief Investment Officer at SLGI Asset Management.